Timing the market is an investment strategy where you aim to buy and sell stocks based on how you predict the market to move in the future. If you can correctly guess when the stock market will go up and down, then in theory you can make the investments to turn those predictions into a profit. For good reason, many people claim that timing the market is pretty much impossible, whilst others out there will tell you they can do it for you, for a fee of course. One of the big problems with market timing is that just like gambling, we tend to hear much more about the winners than the losers. There's a well-known aphorism in the world of investing that goes, "A rising tide raises all boats," which put simply means that when an economy is doing well, referred to as a bull run, it's pretty easy to come out ahead as a trader or investor. And during any period, but especially during these bull runs, where you have hundreds of thousands if not millions of investors trying to beat the odds, you're bound by statistics alone to get thousands who do beat the market. And a few of these lucky guys will really beat the odds and maybe even stay lucky for a year or two, long enough to sell you a few books and courses on how they did it and how they developed a unique system of charts and indicators or whatever that work time after time. They then tend to become wealthy, more so from selling you that dream than actually living it themselves after their luck runs out. I want to show you in this video why timing the markets beats timing the market. Now I know this video might get some hate, but I think everyone can benefit from these examples. And maybe it will help a few of you long-term investors feel more confident about your decision to invest and hold for the long run. And if you're new to this channel, please don't forget to subscribe and like this video if you learned something. Now without further ado, let's get into it. To demonstrate why timing the market is more or less pointless, let's consider two investors back in 1989 and for simplicity say they're going to invest $1,000 a year over a 30-year period into the S&P 500, which for those of you who don't know is basically just a way of investing into the top 500 companies in the US. Now let's say one of these guys has ridiculous luck and managed to invest on the best day of the year every year. And if you're interested, the chance of doing this is about 1 over 1280 followed by 69 zeros. Here is what that super lucky guy would have accumulated. His $30,000 investment over the course of the last 30 years would have grown to around $155,000. Not bad, right? Now let's imagine his buddy is super unlucky and managed to invest on the worst day of the year every year. How different do you think their portfolios would look after that 30-year period? Would the lucky guy have maybe 2 times, maybe even 3 times the wealth of that unlucky guy? Well, unbelievably, he would now be worth just under $122,000. So the difference between the perfect idiot and the man with the perfect foresight is the idiot has roughly 20% less than the perfect market timer and has still more than quadrupled his investment. Now this doesn't just apply to the last 30 years, and it's not just a recent thing. Here's the same graph if we'd invested from 1969 to 1998. And here it is from 1959 to 1988. And finally, here's 1949 to 1978. Hopefully you get the point. There is really no significant difference in the long run between the perfect and worst market timers. Now of course some 30-year periods are going to be better than others. That's just the luck of the draw. Here is a plot of the lucky and unlucky guys' returns in the S&P 500 over different 30-year periods. Despite how special we think we are, there's a good chance we'll sit somewhere between these two lines. And hopefully this has given the long-term investors out there some confidence that your investments will pay off in the long run. So let's not waste time stressing about the daily fluctuations in the stock market. Just invest and focus on increasing your income and improving your self-worth. These will have the greatest payoffs in the long run. I hope this video has helped a few of you out there. Please hit that subscribe button for more videos like this, and give this video a like if it made you feel better about your long-term investments. Thanks.